And look at where it stopped. Look, right at this previous high. Now we have a pretty orderly pullback. The worst case scenario for the bulls is that this would be a beginning triangle for a new downtrend, that it cools up here, comes out of it, and then goes to the downside. If that's what happens, this could really go down pretty far and pretty hard. On the market profile, you can see that this is probably where the short covering happened once it broke out of this balance area down here. Generally, this thin area of market profile likes to be repaired, so we could come down into this area before the pullback is over. We have a poor low here that generally means that this should be revisited, and we have a very high prominent point of control here, so this is often revisited. So it'll be interesting to see Monday if we come up here and revisit this area here and then head lower, or if we come down here, and if we can't fill in this thin area here, then that would mean a strong market and look out to the upside. So I just want to point out to you this Andrews Pitchfork that was anchored back in 2011. And once the market broke down out of this balance area, what made it stop here, especially after all that momentum, what made it stop here? I don't really see anything specific other than this Andrews Pitchfork line. So in market profile, this is a weak high. Generally, they are revisited. So once I saw this, I thought, well, there's got to be another explanation, because I was truly expecting to see this a pullback and then lower down to this high volume node here. But the market has shown resilience. It stopped on a dime, other than a line floating on a chart. I didn't really see any other reason for it to stop there. It's re-entering this balance area here. Looks like a little bit of rejection coming back out of that balance. If we can get acceptance up here another day or two up in this area, the target is on the other side of the balance area. Now, if it breaks above these highs, you should expect some stops to let out, and it could go up rather quickly. My target for a long time, this has been my third target, and every target so far has been the 2200 area. As you can imagine, it's taken a lot to get this market to reverse, and so now it's taken a rest, and that rest could be several days down, maybe into this balance area, in which you would see the Stoke rolling over, and then if it can catch another bid, back up to my target at 2200 and probably higher. Another scenario, it doesn't look as promising on the daily chart, but that this would be a beginning triangle. A beginning triangle meaning that here's the beginning of the downtrend. Here's the consolidation triangle. You break out of the triangle on the upside, and then not crash, but nice healthy move on the downside. Okay, depending on where we open on Monday will determine a lot of things. You can see that it seems to be riding the edge of this Andrews Pitchfork here, and if since it's made a couple of stabs at it, if it breaks through, it could break down pretty hard, maybe larger than a 10 handle range. If it comes down into this area, you got the top of this balance area that it could reverse from. This could act as a demand zone down here for it to gain support. If it cannot fill in these single prints here, that would be that would show strength in the market. If it can't get down to, say, this 45, 6, 7, around 47 level, then maybe even all the way down to here. If it can't get down here, that would be pretty strong, maybe ready for the next leg. If it opens here where it closed on Friday and heads higher, you have this high volume node in here and this high volume node, which may act as magnets and could find some resistance to move lower. Actually, again, if it does move higher, I'm going to be looking at the high volume node there. There's a low volume node there, which may coincide with this trend line. I'm also going to be watching this level in here because that seems to be where the market broke down from, tested, got resistance, and went down from there. Just one final observation. You see this area here, it was a small area of balance, and again, this is on the 5-minute chart, that the market came up and rejected that area. You can see that's a pretty good rejection. So my thought is that this could have another leg down. Again, this is the 5-minute chart. I have this Andrews Pitchfork anchored to 919. And if we watch that as it rises, it did get support here at the center, here again at the center. Here it couldn't make it to the center, so it broke through. It looks like it was, even though it did pierce it, it does look like it was respected here. Not so much on this one. You could say that it rotated around it, broke out of it, and tested it exactly. Came out, broke through, tested the top one, could not break through that. Rotated around the center, came up, hesitated here, rotated around the top, got resistance at the top. This is the extension. This is the top of the Andrews Pitchfork, got support there, rotated around it here, finally broke down through the center median line, came up, retested it, got some support here, could not make it back to this median line, broke through it. And this is where we're at right now. We're on the lower 50% extension. Well, that's all I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinetradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is just a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined.